Hey guys, it's Sunday. I want to make this video to kind of have a forecast of what to expect next week in the market. And as I can see here, this is on the side of Freddy, and this is the 10 and the 2 years treasury, and you can clearly see that we have this inverted curve that is very inverted. We are this level over here that is pretty much worse than 88, worse than 2000, and not really worse than 1980. We have this level over here, this level over here, but we are pretty much inverted here, and it's not looking good in my opinion. With that being said, we will probably have more volatility next week, and here is why. So if you look at the economic data, we're gonna have some reports on Monday, tomorrow. I'm on East time, so this is all East time. We have the 1 year and 5 year inflation expectation tomorrow, and then we have Powell speaking in Sweden on Tuesday, and then we have on Thursday core CPI, consumer price index. So we have a lot of data coming in next week. And consumer inflation expectation 1 year and 5 years on Friday. So there is a lot going on, and therefore I would expect some volatility next week, starting tomorrow. Now, let's see what happened. Let's see what happened during Friday yesterday, 2 days ago. So the market here was very bullish. Everything went up. Tesla went up. Tesla was down on Friday at some point almost 8%, and then it recovered and it actually ended up closing 2.5 points above. So pretty impressive. Amazon up 3.5%. Apple, I mean, everything was green pretty much. So far so good. Good day for the bulls, not so good for the bears. The bears have had their time for a while now. Now, I want to show you a few things. I want to show you the dollar, the VIX, and we're going to do some analysis on SPY. Okay guys, let's start with the dollar. The dollar, this is the daily chart, same indicators as always, 5 days, double exponential moving average, 20 days, the green line, and 50 days, the red line. This is my regression channel 50, and then we have MACD down here and RSI down here. So this is what I use to trade. Now with the dollar, we can see that on the daily chart we are in an uptrend, and not only we are in an uptrend, but we are way outside the linear regression channel 50. So what does that mean? It means that probably at some point the price of the dollar is going to go up. Now there is a straight correlation, or there has been a straight correlation between the dollar and the market, meaning that when the dollar goes up, the market goes down, and vice versa. That's what I've noticed in the last 3-4 months. And so it's something that we have to consider. Also, we have this base over here, and the price is really in between this channel over here, between one or high one or two, let's say 1 or 3 and 1 or 6. The few things to consider here are going to be, let me zoom in a little bit. Okay, are going to be this bullish signs. Bullish signs, the MACD is crossed to the bulls, and the price is above the 20 days moving average. However, the 5 days moving average is pointing down and is crossing below the 50 days moving average, which is a bearish sign. The 20 days moving average is below the 50 days moving average, which is not a bullish sign. And the RSI down here, it's going up. I mean, we have had this kind of flat line here, but now he is going up and it's going up. So It's pointing down, but it's still going up. So we don't really, it's hard to predict, right? So very hard, and that's when volatility comes in place. Now, just to have a better idea for a longer time frame, I would like to check the weekly chart on the dollar. Well, the weekly chart is a bit more clear. Now we have kind of bearish signs in place. Okay, so we are in an uptrend, but like you can see here, on Friday, actually last week, dollar was up and it got sold off. It didn't make a lower low. It didn't make a lower low, but it still wasn't able to hold these gains. So confusing sign here. It can be a retest of the 5 days moving average, can be a retest of the 5 days moving average, but overall we have a couple of signs that are bad. 5 days moving average crossed to the bear, below the 20 days moving average that is crossed, and it's below the 50 days moving average. So the dollar could go down. Also, the price, actually the MACD is crossed to the bears, and the RSI is basically pointing down. What does that mean? Well, the RSI is pointing down. This is crossed. This is crossed to the bears, making lower lows, lower highs. So overall, going to into next week and maybe in the next couple of weeks, the price of the dollar is pointing down. So I'm a little bit bearish on the dollar. What does it mean for the market? Well, if the dollar goes down, the market should go up. And this is my case, and I'm going to show you even why. I'm going to show you one better. So if we go to see the VIX volatility, right? On the weekly time frame, we have some we have this line over here, these levels over here. So it's like it's almost basing, although same situation like the dollar. The 5 days moving average is below the 20 days moving average, which is below the 50 days moving average. Everything is crossed to the bears. So volatility should kind of stay quiet for a bit and eventually going down some more, probably after next week, which means that eventually we're going to see some relief in the market. The MACD, let me delete this. The MACD, actually the RSI is going down on the VIX. Again, weekly time frame. So like you can see, is going down. And the MACD, I didn't select the correct line. The MACD is crossed to the bears. So everything is pointing on a longer time frame to the downside in the VIX. Now, if we want to look at the daily chart, there it is. Daily chart, it's a bit more confusing. Why? Because the RSI is pointing down, but it's going up. The MACD is going up, but it's pointing down, but it's crossed to the bulls. So we could see some volatility coming next week, like I just said at the beginning of the video. And overall, the price, is in a kind of in a downtrend for the year, but it's still kind of flat. It's bouncing from these lows over here. It's bouncing from these levels over here and these levels over here. So eventually, it almost looks like it's coiling up. That could be the thing, but we are at the bottom here. So volatility could be kind of going up for the weeks and then coming down. Now let's see on to SPY. Finally, this is the last thing I'm going to show you. I'll try to be quick. What to expect in SPY? Daily time frame. Let me delete Fibonacci. I was doing some study earlier today. So again, we are in a downtrend. That's clear now. But as I was saying in my previous analysis, eventually we would have had bounced up and touching the 50 days moving average over here, which happened on Friday. Friday we have a great day. It managed to close almost 2.3% to the upside, and we had some positive sign, meaning that the 5 days moving average has crossed above the 20 days moving average. The MACD, it's almost crossing to the bulls. Look at this. The MACD is insane. It hasn't crossed just yet, but it's there. It's about to cross. Now, one thing I want you to consider before going crazy on SPY is that you want to see this over here, right? Here it crossed, and same thing here. Where is it? Here it almost crossed over here, but then what happened? It bounced up, and then it came straight down. It made a double bottom, and then it went up. Same thing over here. It When it was about to cross, it made this huge green candle, and then actually over here made these green candles over here, and then it came straight down to this level over here. So just be careful, because this can go up, can do kind of like this. Let me draw it over here. Can go up on Monday, touch this level, and then come down. And once come down, it can also bounce up. So it's hard, and that's why volatility comes into play. However, the MACD here, it's almost pointing up. I mean, it's pointing up, but it's almost crossing to the bulls. So at the moment, I would line to be more bullish than bearish. And again, I would expect the price to touch this top line around 393. And if that's the case, I want to show you something that I did on the weekly time frame. Weekly time frame in SPY. Well, let's say that this is the bottom. Okay, so we have bottom, top. Oops, I selected the wrong indicator. Apologize. Let's get Fibonacci. There it is. Bottom, top. We have to take we have to cross above this top, okay? Otherwise it's all smoke. But let's say that's what's gonna happen. At that point, we're gonna shoot for 436, 100% move in Fibonacci. It could happen, hard to see, but it could happen. The indicators on a longer time frame, so I'm not saying that 436 is the level for next week, absolutely not. But it can be the level for January, maybe early February. Hard to happen in my opinion, but it could be something to consider. And there it is, the MACD on the weekly time frame. It made this lower high, and then high, and this is the higher high, curling up, cross to the bulls. MACD is bullish, guys. On SPY, MACD is bullish. So that would line up with my thought of the previous videos, when I said, well, it looks like the market is about to bounce. It could be we could see a bounce, which is good. That's what happened in a bear market. We have relief rallies, and then you can set yourself up for a bearish trade. Even the RSI is bullish. It's going up. So these are all signs of a potential bounce. Um, let's see on here. All these levels have been bought up, and the price is going up. We are basically here where this volume is, the peak of the volume, but there is also this peak at 417 and this peak at 440. So it could go up. Um, and remember, this can be seen as a bell. There it is. This is the bell with price in the center over here. So something to consider. I mean, it can go up, and then there is not enough demand, and then the prices starts to go down. However, there are a few other things that I want to show you very quick on the daily time frame, just to have a better idea of what can happen here in SPY. So if we consider these levels, the price, this isn't a scenario. The price managed to close above the 50 days moving average over here. It could go and touch the top line of the regression channel, and then it can even go higher. It can go higher and touch the top of the downtrend channel, which is where this uh, where the SPY made, this high at 473, and then it made this lower high, this lower high, this lower high. So it can go up to 400 again, and then from here it can stay here, and then it can go down. So don't let yourself fool from all the news and the fact that everybody's saying, oh, we gotta get a crash. I mean, eventually we will, but we don't know when, and it doesn't have to happen January or February. One other thing to consider is that this could easily seem like a bear flag. So again, the price can bounce in this range, okay, can go up to 400, maybe exit the bull flag, and then boom, snap back down, maybe something like this, and then going down. So there is a lot to consider, and I hope you enjoyed this video. This is all for today. It's been already a long video, and I hope you enjoy your Sunday with your family, with your friends. Have fun, and then we will be back here tomorrow for some more analysis, and I'm very curious to see what happens tomorrow in the market. Have a good day, guys.